Welcome back to another video, everybody. In this video we are going to go straight into how to sell options for beginners. So with that being said, I want to cue the intro and get right into this one.
I know I'm fine, but the money makes
guys, how to sell options for beginners, and we're going to make this very simple for absolutely every single one of you that wants to learn this. So I just chose KO because it's Coca-Cola, because it's the simplest one. It does cost a little bit more, so you can do this with cheaper stocks as well. So all I'm going to do is go over here. I got KO. We're going to go to Robinhood. I use Robinhood for these videos. You can see I put $1 in there. That's it. I don't have money in Robinhood for one reason. I have other accounts in E-Trade and TD Ameritrade. I even have a Webull account. It doesn't have a lot. It has a little bit in it. But again, I'm doing this because most of you guys are starting on Robinhood or a Webull and things like that. And I want to be able to show you guys exactly how to enter the trades, and it makes it super easy for y'all. So KO, I always have it on my watch list. It's just a company that I absolutely love. I use their products, and it seems like everybody else in the world does too. So the first thing you're going to do is, go to options trading. The second thing is make sure you're on sell. That's going to make a huge difference instantly. And the first one is what I do is I start selling puts. Basically, if somebody's buying this, they're betting that the stock's going to go down. Now, there is, you can see, chance of profit up here. You can see that. So you can go to $858 here for an 89% chance. And you collect $6, and that's with it every week with that $5,800. So all you would do is click this, you add to it, and again, it shows you your max loss, of course, because you're adding $6. So they add $6 or subtract $6 from the max loss, and then that is your trade, guys. It is really this simple. Now you have to have the $5,800. Now here's a trick, though. I'm going to show everybody, and I'm going to do it on another stock as well. If you don't have the $5,800, you're going to click back to buy. And then now you can make the same trade and risk way less. The only difference is here is you're playing a spread. Now that may be confuse some people, but you won't buy the stock if it goes down. So again, I don't do that. I continue to just sell, and if it goes down to $58, and let's go look at KO, and I like to use this tool, just the horizontal ray. $58 right there. If the stock comes down to here before next Friday, if it comes down to there or goes below it, I now own it at $58, and I kept this $6 over here in credit. Now, if you did it with the other one, again, I don't want to confuse anybody here. If you buy this back and say you collect, your $3 total credit of $3 here, it's not worth it, guys, to do on this one. So we want to go to a different stock here. We're going to clear everything else out here, get rid of these lines, and we are going to go to something a lot more people would be able to do, or it's a little bit cheaper. You guys can see I already have that on here. TQQQ. TQQQ. One too many Q's the first time. So I am just going to go back here to my beginning of my Robinhood. I should have the Q's up here. Yeah, I do. So this just mimics the Q's, the QQQ, which is the NASDAQ ETF. And I'm going to go to options again. And then again, instantly, I'm going to click sell. And I'm going to click put up here at the top. And then now me personally, I don't like to do weeklies. I don't like them. So I'm going to go out here to 40 days. You're going to see I'm going to be able to collect a lot more premium. And the premium is what you collect when you sell an option. For any of you guys that don't know this, I'm going to go out here to that 80% chance of profit, because that's about a 20 delta normally. If you look at it, it's an 18, so we'll take that. I'm going to collect $107 off of $4,800. That is a pretty solid little credit here for TQQQ. Now, what you can do if you don't have the $4,700, I get it, not everybody's going to have it. It's a very easy change here to do. And what we're going to do what's called a credit spread. Now again, this only works if you're right. Basically, all the market's got to do is not fall apart. So actually, let's go market already 48. You guys can see I played some other options that were even further out. It looks like before. So 48 here. Now that's a good drop. It would have to drop here in order to get this one. But we're going to go back here. And then I'm going to, I got buy, I got to put here. And then I like to go $5 wide. Now you don't have to do this. 1, 2, 3, 4, 5. And then now we're collecting $55 for a max loss of under $500. That's an even better return. Again, if you don't have the money, it's a better return. Now, if you do have the money still, but you just want to risk less and you like having a magnified risk, basically, this is something that you know you can do. And again, this is just basically setting it in stone. This is the max I can lose out here. And that's 100% okay. It's called defined risk. If you hear anybody say it, that's what it's called. It's called defined risk. And I got no problem with this trade. I do them every now and then on SPY just to enter them, and I'm going to show you the trick that I do. So this option here that we bought back for $52, this one, if the stock does drop dramatically, say again the stock does drop dramatically down to our $48, right? Well, what you're going to notice is this option right here is going to go up in value quite a bit, and that's what's going to show you a negative on your profit and loss. What I do, if I have the money to buy the shares still and I still want to buy this company, first off, you can always just take your max loss. Never put everything into one trade, but you know, you can take your max loss here and just move on. Or what I do is I will sell this for a profit, because I'm assuming this thing gets up here. It'll probably, if it goes in the money, it'll probably be about $100 worth. So I'm going to make $50 actually. So I'm going to make the $50 on this one. I would sell it. And then the one that I sold up here, I'm just going to keep and get assigned the shares. So what I just did there was I took a losing trade down here, but it actually became a winner because I'm going to sell it as a winning. The overall trade would be considered as a loss, guys, if you talk to anybody else in the market. But we're going to turn it into a winner is exactly what I'm showing you here. This trade was technically a winner. I'm going to buy this thing back or sell it back to somebody for $100. I take my $50, and then I keep this as a naked put, and then I get assigned the shares, and then I start selling calls on it at the strike price that I bought it at or higher. Guys, it's just a way to game the system. It's a simple adjustment that you can do in order to keep yourself from losing money. And again, if you want to do it another way, you can also sell, and you guys can adjust these credit spreads however you want, but adjust it, sell, you can buy, and you know, if we don't want to risk a whole lot, we can make $6 on less than $100. Now, I wouldn't recommend this trade. I would like to get a little bit wider, get a little bit more credit here for the risk. You know, I'm going to probably push down here a little bit more. I'm going to get 23 for 170, which is, again, it's about the same risk. The math will add up. You guys will see it as you guys do more of these. They will always add up to about the same if you're going to get filled. But, again, I'm going to show a bigger win percentage if this thing just starts going toward the other way, like we want it to go up in this case scenario. Well, I'm just going to see profits faster rather than if I put it here. You're basically going to have to wait for expiration date on this one, and I don't like doing that because, again, it's 40 days out. I usually take these off at about 20 days, and I'm just fine. Sometimes maybe it's 15 days, but I'm still collecting 90% of the profit. That's the whole point of this. So that is how you can sell options, guys. And again, you can go do anything. You can go do basically any stock that has liquid options. You guys can go to SPY. And again, you're just going to see the numbers are just going to get bigger. That is the only difference in these trades. And again, a lot of people like SPY weeklies. We're just going to go to sell. We're going to go to a put. Again, if you want to go out here, you can get out here a little bit further. You can see the profits start moving here. can collect 107 in 1 week for 47, almost $48,000. That is the difference here on these. You just have to be able to put up the collateral. Again, if you want to trade these on the weeklies and you want this 107 for 481, again, let's just go look and see where it's at first. I think that's always smart. 481, you guys are going to see you don't have a lot of grace period here for a mess up. That's the thing that's going to get you here on these shorter ones. But if you want to do the weeklies and you are just, I got to do the weeklies, like, okay, then we'll show you here. I'm just going to go over here to buy. I'm going to show these out here. You're going to see I can make 50 bucks for $300 in a week. That's pretty solid. Now again, the math will change as the market opens here. I'm recording these on a Sunday, so that is a little bit of a difference here on these. You will see the math change, but theoretically here, you could get a better return on your money here trading the SPYs. But let's go out. The 5 days are more risky. Just so you guys know, you have more gamma risk. I'm gonna go out here. I love the 45 day. Somewhere around in those areas. It's not loading. Yeah, it's not even loading these. Wow. I don't know what just happened, but it's not loading any of these. But you guys can do the same thing further out, and you guys will see you'll get a credit and you'll have less risk, and you'll be able to get, I would assume, if you're selling SPYs now, you can probably get a 20 delta probably right around this area at about that 470, 469 area and be just fine. Again, that is just me eyeballing it right now. That I would like for this to work. Let's see if we can go to Yahoo Finance really fast, because they do these as well. You guys can see the chains on it. They're usually, I've seen that they've been delayed a little bit and they're a little bit differently. So we want to straddle these. There we go. And I would at least, yeah, I want to go out here at least. Let's just go March 1st, and you guys can see the differences here. So now that you're able to actually move these, see the open interest on these. I'm probably, like I said, about that 470 area at 175. You could probably sell this one and then buy one up here and, collect another 50 bucks, have a lot less risk of the gamma hitting you. So with that being said, that is exactly how you can sell options as a beginner with little money and be able to profit. Thank you guys for this video, and I'll see you guys in the next one.